actually investing in Uganda? Zain.
Thank you, ladies and gentlemen. I think I'm going to start with just giving you a little bit about the background in which I operated, which was more in the bulge bracket firms like Goldman Sachs, Merrill Lynch, where their view, whilst we call it sub-Saharan Africa, is in fact restricted to a number of countries within that region, namely Nigeria, possibly Kenya, Ghana, and at a stretch Angola. And the reason for that is simply because they need to operate on fee-type arrangements, and the size of deals, therefore, have to be high enough for the firms to be involved. But I think anybody who's been to Africa and anybody who's spent some time in Africa realizes that the greatest number of opportunities lays not in the 100 million, or rather even the 25 million plus deal sizes. It's in the smaller bracket, which I like to call the missing middle, the under $15 million, which isn't exciting enough for major banks to be involved, simply because they won't be able to make enough fees on it. So I set up TLG Capital with that in mind. It was a growth capital outfit, i.e. that we provide growth capital to companies that have difficulty in attracting capital. And the second is a transmigration theme, which I'll get to in a moment. And our first investment was in Uganda. And the investment was actually a result of my days at Goldman Sachs, because when I went down to Uganda, I had actually seen this incredible plant, Quality Chemicals Industries Limited, which had been set up in a joint venture with CIPLA. And I remember going out of Kampala City Center to see where the manufacturing facility was, and I was a little bit wary because so far in my trips in Africa, every time you leave the capital, you tend to go to an office that's not really an office. And you go past Luzira, and we went in, and I saw this. It's just amazing. It blew my mind that something like this was sitting 15 kilometers outside Kampala, that was tackling one of the world's greatest health problems, and clearly Africa's greatest challenge, which was the manufacturing of AIDS and malaria drugs. And I remember walking through the facility. It was done to a standard that I had never seen before anywhere in emerging markets. And you had the combination of CIPLA and its Indian technical expertise. And just for point of reference, CIPLA does about 70% of the generic drugs worldwide for AIDS. And to give you a sense of what it means between patents and generic, if you have AIDS here in the UK or US, it will cost you about $10,000 to $15,000 per year to be treated. CIPLA provides the treatment at about $150 per year. So there's a vast amount of difference. But again, these are generic drugs, so there's obviously those old patent issues. But they built it in Uganda to serve an African problem. And you saw the dynamism and the entrepreneurship of the Ugandan investors in the project and the management team. And for me, I had never felt so certain about anything in life that this was probably one of the best investments you'll find, not just in Uganda or Africa, but globally. I tried, to the best of my ability, to get Goldman Sachs to invest, because that's what I was employed at the time. But unfortunately, as with most things, it was too small. Uganda is not really a core market. And the biggest question that we all have to face, how do you exit? And it's a very illiquid type investment. So I set up TLG Capital, and we made this our first investment. And what's interesting is that that's the biggest issue we face. Like every private equity individual has to ask themselves, so how do you exit such investments? Given that Africa today, when you read The Economist and you read anywhere in the mainstream media, it's all about telecoms, it's all about financial services. And yet, 3 months after we invested, another investor, a third-party investor, bought into the same company at a valuation that was over 60% higher than what we came in at. We didn't sell. We still obviously hold the investment. But now we're investing actually more monies into this facility, because this year it became the only plant in sub-Saharan Africa to date to receive GMP practices from the World Health Organization. So for us, this is a long-term project, and I think it goes to the heart of how you invest in Africa. You cannot invest in Africa with a view that you're going to exit in 3 to 5 years. You cannot go in thinking, what's my liquidity event going to be? Around the same time, we invested in the largest cancer treatment facility in West Africa, in Ghana. We were the largest shareholders. And this was, again, done September last year. We sold that investment in June this year for a return of over 55% to another institution. And again, the points highlighting here is simply that there's a huge amount of information arbitrage that exists between what the mainstream media here project on Africa and what investors think and what is actually happening on the ground. And the reason for that comes from in my view, just the way that we judge countries, the way we judge wealth. When you look at the fact that less than 5% of Ugandans have a bank account, how can you use GDP per capita as a measure of a country's wealth? In the same vein, you look at in Nigeria, if I listen to GDP per capita, how does it explain to me that nearly 50 to 60 million Nigerians have a mobile phone? So our whole thesis is that the consumerism in Africa is wildly underestimated. And we've seen that in the telecom revolution, and my personal belief is that the telecom revolution gets a lot of publicity is simply because of the fact that people have made money out of it. Satya, or rather Mo Ibrahim, has done more for African investment than probably any other person simply because he was able to make a substantial amount of money that then allows other investors to come in. And I see ourselves as doing the same thing in healthcare. So we have come into a very unsexy industry right now where people continually ask me, how do people pay for healthcare? There are no demonstrable exits. But in the next few weeks, we're going to close another deal in Liberia to close in the only surviving medical facility since 1980 during the Civil War. And we genuinely have that focus on healthcare. Uganda specific, you know, it's interesting to note that, and before I get into our next investment in Uganda, and I just want to close with a few more interesting comments, that, you know, we've really done our homework beyond the official statistics. If you look at a place like India and Sub-Saharan Africa, the World Bank recently did a study where they said that the poverty line that they want to use is $2.50 a day. If you look at that number, 86% of Indians live under $2.50 a day. Only 80% of Africans live under $2.50 a day. And yet, there's a marked difference between how one views investments in India and how one views investments in Africa. The amount of capital available in Africa is minuscule. We never run into competition in the deals that we do. And we tend to focus on sectors. I mean, we're not into high capex type investors like infrastructure, we're not into energy, we're not into mining, oil and gas. We really are targeting the rising consumers and demand. And our next investment in Uganda is going to be in a water bottling and rice processing facility, because we see that as being, first of all, it's politically neutral, which I think is always helpful. And most of all, however, we see rising growth. These type of products, whilst we don't have necessarily a full exit, or you can't go and say, okay, in 5 years' time, we're going to exit on the IPO and the stock exchange, we see that the cash flow generation from these projects will be high enough to tempt investors to invest with us in these projects. So I hope that gives you a little bit of a brief overview of what we do and how we see things. The other core theme for us is bringing India and Africa closer together. I think it's a very, very interesting theme that right now a lot of the talk is about China and Africa. I think that India, with its natural demographic of people in East Africa, with the same level of income inequality, with the same level of infrastructure issues, with the same level of bureaucracy, but India has managed to have a high level of human capital, leverage its huge human capital base, and create low-cost industries that can be transported and migrated to particularly East Africa.
I'd like to invite you once again through Professor Kigozi that the ground is fertile, we can accommodate a few more, the laws have changed a great deal, regulatory functions of the government remain in place and very conducive to any industry. Thank you, and do come to Uganda tomorrow morning. There's a flight.
Okay, thank you very much, Honourable Minister. I'd like now to throw it open to the floor, please.
John, can I just take 1 second to introduce our Member of Parliament, Honourable Ekanya, has just, he's been around. He represents his constituency, which is Tororo, a big town in Uganda. That's where you have cement and a very rich area. He's also a member of the opposition, sort of, I don't know, sometimes we think he's government, but he's opposition. He is dual opposition in parliament. So we are very happy to show you a united front. Both opposition and government, we're here. We are promoting our country together. Kanya, you're welcome. Honorable Kanya, you're welcome.
As the Minister said, he's a watchdog, so that's good.
Thank you very much for your presentation. My name is Crystal Kabajwara. I'm from PricewaterhouseCoopers. My question relates to the East African community in general. One of the main challenges that investors face is double taxation, and for a long time, the East African double taxation agreement has been on hold. So I'd like to know if there's any progress on that front. Thank you.
Well, I know there was a protocol signed in '97, it never got signed, but I believe, you correct me, because it's one of our big complaints, the Eastern Africa Association, but I believe that it is now well on the way to being resolved and agreed. You know, so perhaps you can update us on that. It's one of our big complaints, it has been as well.
Seriously, it is being taken very seriously, the signing of it, but also the fact that we're harmonizing taxes means that it is not, it's less necessary. We'll have the same level of taxation in all the countries, but we have been promised that it will be signed soon.
Okay, and as I said, that is, if you're doing business in the region, that's quite an important thing. If you've got a company in Kenya and you pay tax in your branch in Uganda, that doesn't count against your tax bill in Kenya, which is quite a big thing if you're trying to market the place on a regional basis. So it has been recognized, and as I understand it, is very close to being resolved. Any other?
Okay.
Okay. Yes, sir?
Well, mine is not a question, it's an observation. Am I allowed to make that? Or because you were talking about questions?
As long as it's not...
It's not a long one. It's not a
15-minute observation.
No, absolutely. The gentleman, the investor who runs the capital, yeah, that's right. So I didn't pick your name up. Zain, right. You made an observation about information about Africa investment, and you also mentioned, and the madam also mentioned the issue of going to visit investment agencies right across Africa. My name is Winston Ojukutu Macaulay. I work with Africa Analytical here in London. My problem is, I don't think there's so much that Western investors are having problems with the African market. I think the African politicians and civil servants, that's the problem. They themselves underestimate the African market. So if the African leaders and the African ruling class and the business community within Africa underestimate the African market, what do you expect from foreign investors? That's my point. Thank you.
That sounds like a question for the Minister to me. You're under attack.
Well, not so much under attack, but being called to order, more or less.
Yes.
Indeed, there have been occasions when it looks like the cabinet, especially members of the cabinet, underestimate their own market, and even resources which could be mobilized locally for investments are ignored. In a number of occasions, people, especially the private sector, the indigenous private sector,